This is the Real Estate Guide to Success Quick Tips video series. I'm Vance Poindexter. I'm here with Ronnie Adams. How's it going, man?
Oh, pretty good.
All right. Today's topic is going to be giving you a basic investment property purchase checklist. All right. Something you can use to go out and get your first property. You can go through these steps and make sure you follow these steps, and you'll probably have a successful purchase.
Yeah.
Starting off, we're going to talk about, first thing you want to do is make a decision as to how you want to use the property. You want to flip it, or you want to rent it. What do you want to do with it?
Yeah. The first thing that you want to do when you're thinking about buying a property is, do I want to flip it or do I want to hold it?
Okay.
And holding it meaning, do I want it to be a rental property?
Okay.
So there's going to be a couple things that you look at that you say, okay, if I'm going to flip it, I need to be in an area that I know I can flip the house. It's going to be a quick sale.
Right.
If I'm going to rent it, I want to make sure that I figure out what my rent is going to be, so I have to find a house that's going to support that particular rent.
Such that you can you can pay the mortgage and make the profit that you want to make.
Exactly. If you buy a house in an area that is a flip area per se, then the rents are going to be real high.
Okay.
If you're going to buy a property in a rental area that you think that you're going to flip the property, well, you might not be able to flip it because it's not as desirable.
Okay.
And it's not saying that rentals aren't desirable, but I have to look at, okay, can I fix up, and sell this property in a 6-month period?
Okay.
In a rental area, I might not be able to do a 6-month period. And if I can't do that 6-month period, I'm paying taxes, I'm paying mortgage payments, and that's starting to eat into my overall
money
profit.
out of your pocket, yeah.
Yep.
Okay.
So you have to make sure that you pick the right one.
All right. What about the next step? Maybe choosing, determining if the rehab expenses are too high.
Yeah. Well, like if I'm going to walk into a property and let's say that I already said, okay, I know it's going to be a rental or I know it's going to be a flip.
Okay.
I already know that now. So now I'm going out and I'm looking at the property. So I walk into the house and I see that it has an oil tank. So for me, an oil tank, as soon as I see that, I'm going to walk away.
Where do you see that? Where's that?
A lot of oil tanks from older properties, they're under the ground.
Okay.
So then you have to take them out because the new EPA rules are that you got to be on top of the ground.
Gotcha.
Now the only thing is you don't know whether that oil tank leaked or not. Now if it did leak, then you'll have to pay the cost to clean it up.
And that's extensive.
And that could be an extensive cost. So generally if I see an oil tank, I don't mess with the house.
Okay.
If I walk into the basement and I see that there's a crack in the foundation, which I've seen before, can that be repaired? Yes, it can, but it's going to be an extensive cost.
Okay.
So I'm not looking to put out, tens of thousands of dollars on that one repair when I got to do the whole house.
Gotcha.
If I happen to walk into a house and see that, the roof leaked, but it was an extensive leak, so when you're looking at the second floor, I'm on the second floor, where the leak came down or the water came down, now it messed up the floor.
Oh.
And if it messed up the floor, you might have messed up the floor joists. So now it could get into some structural damage there.
Okay.
So I may pass on that particular house too, because there's a lot of houses out there. I don't have to take that one.
Gotcha. So on your checklist, you're saying at that point, are the repairs necessary for this property too extensive that it makes me just back off from it altogether?
Yeah. At some point, you would have to say, this thing could get out of hand.
Okay.
And once you get in, you can't get out.
All right.
All
right. So then that ties into the next one we have on the list here, talking about are the rehab costs in line with what our plan is for the property in the end?
Exactly. If you're looking to flip the property, then you already know what that house should be worth at the end.
Right.
Now, once I purchase it for X amount of dollars and I fix it up for X amount of dollars, then I know I can sell it. This is the top that I can sell for.
Right.
Now, that top amount that I can sell for, I would have to estimate that I may be 10-20% a little bit lower because I want to get a quick, a flip.
Right.
So you want to make sure that your rehab costs don't go past what you can actually sell that property for and make the profit that you were looking to make.
Okay.
Even with the rental, if it's going to be a rental, then I already know that my rent can not be more than $1,000 a month. Let's just say, I purchased the property for X amount of dollars. I'm going to rehab the property for another X amount of dollars, whatever that may be. Then I have to get a mortgage.
Right.
Well, once I get that mortgage, if my rehab costs were higher, that's going to make my mortgage higher, which is in turn going to make my payment higher.
Right.
So now, if I put too much into the house, then my payment's going to be too high. I can only rent for this much.
Gotcha.
My payment's going to be right here. So I want to make sure that I can keep all that in line. All that is planning before I actually purchase the property.
Excellent.
You know, they're not blind. You just can't walk in and buy a property and hope for the best, you know, because you're going to get bit.
And that's why we have the checklist here. Is to help
Exactly.
get through that process,
Yeah.
right?
And the only reason we do have the checklist because I got bit.
Well,
So you don't have to.
right. Last one we have here on this checklist is making sure you can get out of the property if you need to. What does that mean?
Yeah, I always say that you have to have a way out. You know, if I'm going to buy and this is more or less for rental properties.
Okay.
If I'm going to buy a rental property, then I need to know that I can sell it at some point if I don't want to do this anymore.
Okay.
You know, now sometimes good rentals are in bad areas. You know, so I don't want to buy a property. I always say that if you're going to rent something, you need to go in with the mindset that I'm going to be there for 30 years.
Okay.
I might not be able to sell it, or I would have to find someone else
Take it
just
off
like
your
me
hands.
to
Yeah.
take it off my hands. How about if I can't?
Right.
So if I have the mindset that I'm going to be in here for a while, then it doesn't, you know, I'm not disappointed when I can't sell it.
Okay.
But you want to always have an exit strategy. Now, so I might not buy in that area because I'm like, I might not be able to sell it, you know. So this area here, I probably could sell it, but you know,
Still might be a little
it
dicey.
might be a little dicey, but I'll take the chance here. So you kind of always have to have that time period. You're not going to want to do it forever.
Right.
So you want to be able to get out. But now, if you buy in a real bad area, let's just say, properties always appreciate in value. So I might not be able to sell it in 3-4 years, but 10, 15, I probably can sell it, you know, because it's going to increase in value or whatever like that. My payment would be lower, or I would have paid the house down some, so I can always get out, you know, at that point. So, but you always want to have some sort of exit strategy at some point. I'm not going to do this forever.
All right.
Yep.
There's a quick, basic investment property purchase checklist you can use. You can find other checklists, podcasts, posts, all kinds of great information at our website, www.realestateguide2success.com. Thanks, Ron.
All right.